at the next level where you could ride off into the sunset, but you're still staying here helping people. I know you don't like ass kissing, but this isn't really kissing your ass, but it's kind of like, how the climbers, they'll leave the pins in the wall. That's kind of like what you kind of do. It's like, I'm not going to be able to do the work for you. I can't make the climb, but this is the path I took to get there.
Yeah.
Yeah.
I mean, I like that though. I mean, it's, we say it all the time. It's like, it does require like an absolute shit ton of work. And I don't know, there's just so many people who try to take as many shortcuts as possible. But at the end of the day, just like you know the path, you just have to dig in and try to walk it, I guess. But if you don't, I don't know, you're just going to sit there and not make any progress. There's a lot of people like that. I mean, like when I used to do coaching, that was the biggest issue, is that, I'd record all the coaching calls and I'd put them on YouTube on a private channel, and I'd monitor the views, and 95% of the people that I coach would not go back and watch any of the video or anything like that. And that's not to say they weren't putting in the work, but it was just like the only data point that I had, because a lot of them would stop communicating. They would buy challenges immediately and instantly fail them, or be like, I'm in drawdown. It's like, why are you in drawdown? We had a coach call like last week. It's like, it's just obvious that a lot of people don't put in the work required to, do it. Like having a conversation here with you, I know there's a lot of people who listen, and, this might resonate with some of them, and maybe some other people know that they're putting in work. It's just a matter of time if you are doing it, but there's a certain level of work that you actually have to do. Don't kid yourself.
Bro, look, even the work I'm doing right now, the 5 to 10 trades, getting marked up until I have caught up my data on GU, AU, and US 100. That's the very minimum of what I can hope to do to even get a sense of what I'm going to be able to do. That's not even, I'm going to be able to replicate these exact results, because that would require perfect execution of every opportunity that's presented on the 15-minute. But also, I know that once I have this plan, the plan is probably going to evolve even further. And then only then, after I've done all this base work, that's when you start to see the kind of result. I can't remember who it was, but it was on, Riz, the guys whose podcast you were on. Tans from Vertex, I think it was actually. He's an old friend of mine. We used to know each other during the Signal days, actually.
Oh, really?
And he was talking about how some of the people he was mentoring, it would be the same people who were chasing that FTMO account, let me get to 100K, let me get to 200K, who weren't really focusing, how am I going to trade this? They were just so focused on the idea of funding. These are the same guys who would loaded like £500, £1,000, $500, $1,000 into accounts, blow it. But this is simply the new route that they can take to do that and go about it, because they're thinking, okay, I'm going to have a chance at this 100K, but they're not actually engaging their brain enough to understand, okay, the stringent processes. They're just going into the positive negative cycle of, oh, well, I lost the funding, that's not fair. Or even if you get slipped, it's a decision that you took that led you to that point. So it kind of got to the point where on the 15-minute, obviously I haven't been out here super long, but I could either complain about not having confidence in the strategy and then proceed to do nothing, which is the path I think a lot of people take. And then I could, or, I can take the hard route of, okay, I'm basically starting from scratch, but I know exactly, like I'm 10 steps above where I started for the 1 minute, in the sense that I can recognize structural liquidity, order flow, strand, reversal, CPBs almost instantaneously. Whereas I didn't even know what these things were when I started trading the 1 minute and started to try to gain consistency. So I think it's like, it's that, it's not the, oh, I'm funded now. I haven't reached that kind of yet. That's not the goal, of course. It's to take the best trades with the best OR and then make the best returns with minimal drawdown. However, I'm already 10 steps above where I started last time. And I think that's what it's about, continually evolve to get a step higher. It's just a climb to the next hole. That's it.
That's just it, man. Yeah. But, that only comes from tracking your progress. If you don't track your progress, you don't track your trade.
Something that actually comes from network engineering, I think it's like information you're not tracking is, data that is organized is information, and then information that is organized is process. That's how you gather it. If you don't, you can have all the data you want, but unless you actually go back and look at it, it's useless. And that's where the Blackwatch Friday go collect the data. It was
I think your mic's starting to cut out.
Jesus Christ.
Yeah, your mic's cutting out now. Yep, he's gone.
What do you think about this short that's playing out right now?
I like it. The only thing that I guess I'm still trying to figure out is like, obviously from the 4-hour perspective here, we came and took this low, took this high. I do think this is a potential sweep because if you look at this like long-term kind of demand reaction, right? Like it's just coming. The initial reaction is here. This is the high from the initial reaction. This could potentially just be a sweep into this zone. Because if we kind of zoom out a little bit, like we've essentially like we had this bullish push. It's not meant to be accurate at all. And now we're kind of shifting back down. So I'm not really sure, right, what price wants to do on kind of a long-term basis or a higher time frame basis. But in terms of this, like I've got some decent indication that price wants to trade lower. So I like it. Not a ton of momentum. We have CPI tomorrow, right? So it's hard to say exactly what price wants to do today. Usually before, I forget which one. It's either CPI or FOMC. There's one of them particularly that has like choppy price action the day before. I think it's NFP a little bit too, but I know one of them usually like the price action leading up to it's not really a big factor. It just kind of does what it normally does. But early on there was this. I like this one right here. This would have been nice if I was up for it. This was at about 6 a.m. my time, but I was up late last night, so I did not wake up at the 5 o'clock like I normally do. But this would have been a good little 5-hour trade. And then I don't know if there was somebody's at the door. Hold on one second. Who's at the door? Oh, shit. You got it? Okay. Sorry.
There were too many Monday old fashions missing the 5 a.m. wake up time.
That's it. Sorry, guys. I'm just trying to figure out what's going on. Oh, okay. Never mind. All right. Sorry. Say it again.
Did you have a few too many Monday old fashions to get the 5 a.m. wake up time?
I've been doing better. December was a total, like, it was just let go of everything. I was like, I don't care what time I go to bed. I don't care what time I wake up. I'm trading. I'm not doing anything. Kids aren't in school. You're just
chilling, man.
Yep. Now I'm trying to get back into it. It's like I'm trying to be in bed at least by like 10, but like, I don't know. I'm a night owl. I'm usually up until like midnight 1, but I don't know. I gotta wake up at
you're staying 5. Up till 1 and then waking up 6 every day, man. You got to understand the strain that's put. Look, I know you're some athlete with the. Do you call it football or do you call it soccer? I'm from Europe, so I will.
When I'm in Discord, I call it football.
Okay, Grant. Yeah, I know you can't talk to a lot of the Americans. They'll be like, "Oh, the one you carry with your hands." But yeah, like I understand, but you got to watch your heart, man. But if you're talking about like wake up times and stuff like that, have you got melatonin? You need to cop some, man.
No, I don't like it. I don't have a problem sleeping.
That is a game changer for me.
But I've taken it before, and it like makes me feel crazy. Like I feel like I'm going nuts a little bit before I go to bed. I can't. I don't have a problem falling asleep. I can fall asleep. I could fall asleep right now talking to you guys. Just pass out. But it's probably because I don't get enough sleep. but I've been.
Sorry, go ahead.
I was just saying, like I've been going like when I wake up for 5. What is this? Oh, there's no news right now, is there?
I don't think there's any news at 3:51.
That's a lot of volume. I only really look at high impact news anyways, but what's today, Wednesday? Nothing. Yeah, I don't know. I like when I wake up for 5, I'm trying to get to bed by 10, which is not bad. But I've also finally started going back to the gym, so I feel like I've been extra exhausted.
Put on that Christmas timber.
Yeah, last thing I need to be is like skinny fat and like have some kind of like donut situation going on. I got to take care of business.
my boy, you are rich. You can do what you want. You can be
No.
fat. You can be skinny
Nope.
fat. Mm-hmm.
Nope.
You
That's
can.
too much.
Doesn't mean you will, but you can.
You got too much dignity, man. I see a problem, I solve a problem. Too much bubble tea.
I get that, bro.
Did anybody catch this short? I feel like everybody's been on here when it's set up. My bad. Who was asking about this short earlier? Was that you, Murphy?
Yeah, I caught it.
Who said that?
Oh,
Snake?
Yeah.
Shane, did you catch it? I see you trying to talk. No. Okay.
I do
I just
have
want to hear Shane's laugh again. I feel like I never hear Shane's laugh anymore.
Hello?
I managed to catch the short, but I feel like
Hello?
it was more out of stubbornness than the skill.
You're stubborn? What happened?
Yeah, I caught the short, but that's because I was really biased on the short, so I kept looking for it, even as other people were calling for longs. I was like, oh, I don't know, I feel it.
Longs? Who's going for
longs? I see it. The 4-hour demand.
Yeah.
Oh,
it
on the
didn't quite
counter
reach it though. Yeah, it didn't. For me, it didn't reach it. It's missed by a.
You talking about these guys right here? This little dude.
Hello.
Hey, Shane.
How are you doing? All right.
Good, brother. How are you?
Yeah, good mates are good.
Yeah, look, it doesn't quite touch
it. It doesn't get there. Like, I think it's more just the sweep, because there's a massive 15-minute leg, so it's a sweep with that huge 15-minute leg, and then kind of just takes that.
Yeah, that's kind of how I was seeing this too. It's just, if there was a counter trend play, I was looking after this long here. It didn't quite give me what I wanted. But then because of the 5 minutes a little bit more, it's got a little bit more structure for us. And the chain is here. And this is the demand reaction, the flip, blah, blah, blah. Like there's even more kind of up in here actually. But sort of. Well, it depends on how you look at this whole candle here. But you could say, argue that that's part of the chain. You got a pretty significant chain. You got the demand failing. You got this demand failing. And then you got this kind of unmitigated zone. You got this flip here that doesn't, it actually does sweep. So that could throw you off too, but that's all right. But this is relatively unmitigated. But
how's the 15 looking for you? I'm seeing it as like, although overall we still have a lot to kind of go down. Like if we're going to retrace all the way down to 4-hour demand, but keeping in mind that we have tapped into the extreme 4-hour from the very left. It is, I think the way I saw it was we had a huge weekly. Yeah, we had a weekly supply zone, and it's causing us to kind of push down the past. When did we tap into it? We tapped into it on the 19th of December. We had this massive weekly supply with inducement below it. But what I was looking at, because this is where I try to, I have your voice in the back of my head. It's like, okay, what examples do we have of this happening in the past? And it doesn't happen very much. But out of the 5 or 6 cases I was able to see of weekly, previously pro-trend zones with inducement playing along, what usually happens with it. And although it is a really strong zone, the weekly is always going to kind of take priority. Since we've already blasted through maybe 3 or 4 supply zones already at this point, I'm seeing it more as a CPP. Of course, the reaction is going to be a lot more drastic on the weekly. Daily. Yeah, so I'm seeing it all as kind of like IRL until we get to these higher ends where there's an extreme supply chain starting on on February 22. So
I think CPI will be really telling tomorrow, because if this is just a catalyst for pullback, because with catalysts for pullbacks, the best ones typically break structure in this, in a long position to the downside, because that's what's going to fake everybody out, especially supply and demand traders. Like, oh, the demand failed. That's like, but supply is not exactly holding yet, so you got to wait a little bit. But then if you wait too long, you miss the long. You know what I mean? It's like, well, I really wanted to short it. It's like, well, yeah, but it's a catalyst for pullback. So it's like here, right? If this is a catalyst for pullback and this is used, both of these demand zones are used as liquidity, as tapping into this guy here for whatever reason. And now we've technically, what is this? The daily? It's like this little mini high. It's not a high or a high for that matter, but from the 4-hour, it could be seen as such, where it's like, well, this is a structure high. It took out that high. So is this the start of our bullish continuation on the higher time frame?
That's exactly my thoughts as well. Like for now, I would say it's kind of on the 4-hour, for example. I'd say it's a matter of who wins the next battle. that will be deciding, are we continuing the trend up, or are we going to, resume the bearish price action we've been seeing for the past year and a half? And the daily demand zone that we've reacted from, it kind of gives me cause to believe that it might be a push upwards, simply because of the fact that if we look at where that daily demand zone is and then the next available piece of IRL, it is a lot of distance in between where we are and where we would need to be able to take it out. So and then on the same to the upside, we take out these highs at maybe like 126, and the next available one is almost 4 cents higher, and it takes a lot of money to kind of push us between it. So it's going to need a heavy catalyst to kind of break either of those thresholds.
Yeah, I mean, I think one of the safe things to do, which not everybody can do it, because even like us U.S. traders, if you're trading with a U.S. broker, you're not allowed to hedge, which is obnoxious. But what you could do potentially is you could take both sides of the market. If the short sets up, you get in the short, and then you're in a good position, because if this is all internal range liquidity, you're set. But if it wants to continue higher, this is the time to do it, because we just got the 4-hour confirmation that if this is a catalyst for pullback, that 4-hour shift has happened. So that means that the pullback is done technically, and it could continue higher. So then we look for that setup. The only tough part is we have this like large imbalance on the backside and the front side, so you can see it as a window of imbalance. But 9 out of 10 times when you see this huge impulsive move in and out, price doesn't always come back to the extreme. It likes to play off of something here. So like we've seen, I forget who that was, looking for that 4-hour demand. We have 4-hour demand here. There's an example right here. So it's not necessarily a window of imbalance. It's just a large push up, a large push down. There's a large imbalance on both sides of the market. Price, that momentum, right? It's momentum, it's volume. And then price tends to kind of just drift away, playing on the more immediate zones rather than pulling back deeply. And if you go back and look at like other data like this, you'll see, it's not going to be 100%, but you'll see a pretty strong likelihood of something like that happening. So if that is the case with this one, then this 4-hour demand does look pretty good. So if we were short here, I'd look at potentially partialing out here and then just seeing what happens. If it comes through this zone and we just keep seeing that bearish price action, then again, I would look for continuations. You still got to look for the confirmation on the longs if it does want to set up there, though. But
yeah, with supply having already I don't know if I kind of view supply as in control right now, because if we look at it, I'm viewing that huge wick, the huge wick that got swept originally. I viewed that as the last point of demand, because we tapped up into this 4-hour supply from very far to the left, and then it was also a sweep of one of the IRL pieces. So I think it was valid to kind of use the LPOD before the sweep, and then we saw that low go. No, 4-hour. So on the 4-hour, we can see where we have that gigantic wick when you zoom in, and then it's more internal. So if you look a little bit higher and
to the left or to the right on the back leg.
Yeah. So if you see, we take out that tiny local high to the right of that. Yeah. See, so we take that out, here. And then I use the last point of demand that was in our reaction right now, and then we can kind of see although it's been very tight price action since the 6th, we see the low of that wick gets swept, and then what happens? We push back up instantly. It respects supply, and then it creates a newer low past that. So I view it as demand failed, supply got respected, demand failed again, and now supply has been respected. So it kind of depends. Do we get the confirmation on the 15-minute of this 4-hour demand zone, or do we simply continue to respect this local 4-hour supply?
Yep.
And then depending on whichever happens, I'm just going to play the mitigation of the next POI.
Yeah, I mean, because that's just it. It's like we have this huge push up. We don't really have any bearish structure. We have some bearish substructure, right? So like in this leg, we are starting to see a shift to the downside, which again is significant, right? It's still going to give us potential intraday entries. Even if we look, where's a good example? It's like here, right? You have this like huge leg. That's the high, that's the low. You could potentially argue that this is a high, but maybe. You start to see bullish substructure, right? You start to see within large legs, you start to see a shift in structure before price actually shifts. It's like this right here. You see a huge push up. You see the 4-hour just kind of holding supply before it actually breaks the low. And there's potential entries within this,
That's one point. That's it. In my pack testing, it's kind of provided a lot of confusion in the sense that, you know, you can see a lot of these beautiful opportunities where supply is holding, but it's before the last point of demand has broken. So that's kind of
Yeah,
where you have to be careful, maintain the patience, and then wait. But like on the other side of that, you know, there's a lot of fake outs where you can see supply hold. It only holds until we get to that last point of demand, and then once we get there, it's all it's blasted through. But on the plus side, if you have the patience to kind of wait, another thing that I've picked up through my testing is that if I have that patience to wait, like I would say, a lot of the time, the very last piece of the supply chain or the demand chain, which breaks the opposing zone, that is the last one that usually gets mitigated or respected, and then it has an absolutely huge impulse to the other direction, and then you're able to ride that momentum up to targets. You know, so it's kind of, you might not have the confirmation of, yeah, okay, we've seen this zone break. Of course, if you're comfortable playing the lower time frame and you have a set plan around that, then you can of course go for it. But if you wait until, you know, that last point of demand or the last point of supply is, you know, disrespected, even if it's just by wicking that low or wicking or a minor close above it, then a lot of the time price will retrace and then it will fucking rocket off into wherever you want to go.
Yeah, I think an important thing too is like when you kind of have that substructure kind of shift, a lot of it depends on your confidence in the POI itself. So if you know you pretty confident in that daily or weekly or 4-hour supply for that matter, and you get a huge push into it and it starts to kind of trickle away like that, you know, even though you don't have that last point of demand from the structure side of things failing, you can look at that and be like, well, this supply zone's really strong and we're starting to see kind of that momentum to the downside and that shift in order flow. I can look to short it from there because the POI is so good. So like that's, you know, that's another way that you can look at it too.
Yeah, definitely, I agree. Once you kind of see the, well, technically even smallest of candles on GU, you know, or any pair for that matter, it takes billions to kind of move it, even a small amount. So,
Yeah,
you know, if that's the confidence you have and the data behind it, then most definitely I agree. I'm not at that Blackwatch level just yet, but soon, possibly, and then even further. So that's the goal.
What about the actual? I feel like there's some understanding online of how much money it actually takes to move a certain amount of pips. I can't remember, but it's I know it's a lot. It's like an absolute shit ton.
See if Google has the answers.
€30 or 30 pips might take $2 to $3 billion.
Jeez, man.
Is that right? That can't be right.
On which pair though? Is that for GU
that one
or
says EU.
EU? Mad.
I don't know if that's true.
That sounds small though, doesn't it?
Well,
Like,
because how much? Yeah, but how much money is how much? Well, that says for 30 pips. Let's see how much. Because how much is traded daily is trillions.
Yeah, like 5 to 7 trillion. That's why, like, understandably, maybe like on the days where we have like huge ranges, but surely if it's supply versus demand, then it's probably like double or triple that if both sides have backings behind them.
Yeah, it's about 6.6 trillion daily traded.
Crazy.
How much?
Also, I was looking back on these kind of videos, you know, your past videos, and you created the CPB, you created IRL, you created ERL, like the concepts of them, didn't you? Where did like, how did you gather the data that you were like, okay, this is this, and like, what kind of questions were you asking to get to those points? Because this is like the main thing. If you're looking at in our DMs, I'm not asking for like the answer of it, but rather what questions were you asking? Because that's kind of the only way I'll know. Like, you can tell me something in a video 100 times. There's probably something that you've put into every single one of your videos that I still haven't seen.
So,
but unless I actually go for it myself, I won't be able to figure it out.
So everything for me is based on my previous experience outside of trading. I was a senior systems engineer in IT. I do entrepreneurial consulting for small startups and help them kind of get out there and like build their framework for generating leads and that kind of stuff. And a lot of what I do is based on problem solving. So everything has to, like, whether you're defining a target audience for your business, trying to write copy for your services, generating case studies to, again, generate those leads and help people understand what you do. Everything is based on, and on the IT side, it's based on problem solving. So a lot of that has to do with defining the problem first. So if you remember from my expectational order flow video, a lot of what I was saying was like continuations, at least for me, the way I view it, are there's more opportunity in continuations, even though they're slightly harder for some people, right? Because trading a reversal is just so much more intuitive to people. So for me, I kept saying, why do I keep taking losses trying to trade these reversals? So that was kind of my problem. Why am I taking losses when I'm trying to trade reversals? And then what I realized was that I'm essentially trying to reverse a CPB, right? Which at the time wasn't a CPB, and then it was coined a catalyst for pullback. So that was the primary problem I was trying to solve. Is it was just looking at my losses, right? I was analyzing my journal. I was saying, man, I'm seeing a pattern in my losses that I keep losing on these reversal trades. So again, from the expectational order flow video, you'll hear me say in there that there's only ever two real reversals, the high and the low and the high, right? Everything else in between, especially from the 4-hour perspective, right? If you're going to trade intraday stuff, 5-minute, 15-minute stuff, there's way more continuation opportunity. So I was like, how do I get into those continuations? And why do I keep losing on these at the time, right? What I thought were going to be reversals, because you'd get the reaction and price would shift order flow, right? It would shift structure on the lower time frame. It hit, like if you're trying to short it, it hit a internal range demand zone, and it would shift structure on the lower time frame, and then everybody would get in. Everybody in Phantom, anybody trading supply and demand, like for the most part, it's like a huge like loss factor for people. A lot of people trade that. So I was like, how do I fix it? Why doesn't this actually reverse? And then those are the kind of questions I asked while I was gathering the data, and then understanding that it's like, wow, like on these pro trend moves and sometimes on like counter trend moves, every piece of demand in the middle of the leg was just giving reactions. Some gave bigger reactions than others, but for the most part, these reactions always shifted on a lower time frame. And I was watching people in the community take losses left and right. I was taking losses left and right. I was like, okay, clearly I just need to shift something. So then I saw the pattern in the data, and then that was kind of it.
Yeah, that's very good. You have do you know Alex Hormozy? He's quite the man on YouTube, man. You have a very similar process to him. That's why I kind of, not to say I don't pay as much attention to the other team members, but I find that your line of thinking, which is pure logic of, okay, it's not that I need this exact, because the way I see it is I'm never trying to get an exact result. I'm just trying to figure out why something happens. And then if I find out why it happens, then I can figure out how do I stop it or how do I continue to do it? Because I can't just go for a result. And you have a very similar line of thinking, the way which Alex Hormozy was. He was just renovating these gyms. He was pushing them up, but he wasn't asking himself, how can I scale this even further? Whereas, he then proceeded to do it, and he watched his returns compound into much higher results.
Yeah, I mean, that's the thing. It's like, I think one of the stigmas on this industry in general, and maybe, I don't know if it really relays into the other markets. It seems to be Forex pretty heavy. I don't really know. But, like, even when Phantom kind of started getting leaked and the SMC scene kind of blew up and everybody was trading chalks and all this other stuff, everybody was like, well, why is the market moving? Like, we know why the market's moving. And it was all this institutional nonsense and whatever. And it's like, these are like the whys that don't matter. Like, who gives a shit? Like, the whys need to be like specific to you. When you're developing your pattern recognition for these different models and stuff, it's like you have to be able to, again, articulate those problems that you're having and then actively search out the answer. So like knowing why the institutions are moving this and that, like none of that really helps an individual trade. It's like cool knowledge if it's true, which it probably isn't. And then it's like, it's just useless information, but it sounds cool. So I think that's one of the things that kind of kills me in general about, the crap you see on social media and whatever. But you know,
Yeah, no,
Sure.
I agree, man. We're not on the search of answers. We're just asking questions.
well, yeah, I mean, like you just got to figure out what works best for you. You know, if like you're a heavy reversal player and you're taking losses when you take your reversals, figure out why. You just got to figure out why.
I found that in my backtesting, a lot of the reasons for the losses would be that I was so drilled into the 15-minute that I was, as I was saying earlier, I was so drilled into the 15-minute, and like you were saying with the CPBs, it was that I was continuing to play in, and I would either not be paying attention to the CPBs that were incoming, or I wouldn't be aware that I was playing out of a CPB because I hadn't looked at the 4 hour for a certain amount of time.
Yep. Yeah, that makes sense. I mean, that's the biggest thing is that 4 hour order flow. When I was doing coaching, like at the beginning of Phantom, everything was like, it's the same now, but it's all 4 hour stuff. It's like everything, because often you'll get like 4 hour supply and demand zones and price between from the 15-minute. It's like you'll see price pushing, like you might get like bullish price action, and then it might hit a CPB to the left, and you might get a shift to the downside. And then people are like, oh, I'm going short. It's like, why? The 4 hour supply is up here. Like, just because it shifts to the downside here does not mean it's going short, right? We need supply to hold first. And then, it can set up lower for the short if it's actually going to do it. But 9 out of 10 times, you're just getting price, given that bullish price action pops up, and then you get that shift to the downside. People get caught up shorting this, and then it just does this. And then right back into the 4 hour. And then it shifts to the downside. So like that's kind of like the whole thing there. It's like, don't get caught up when it hits that catalyst for pullback. So, and again, for me, it's like just trading from 4 hour zone to 4 hour zone, understanding which one's pro trend or counter trend is going to make a big difference in like your market direction. And, obviously that's a big piece of the trading. So
I found that as we kind of approached December as well, though, the price action became a lot more erratic, where it would be a huge pile of accumulation and then a catalyst which would, send us in that direction without a lot of chance for 15-minute entries, unless you're of course playing, this is the flip that was created off of the extreme where we started that move, and then you would be able to play that flip. But if you were looking for an actual retracement, a lot of the time it just wasn't coming with these big ass pushes.
Yeah.
So
true, man.
after I realized, I was like, it's just volatility.
Yeah, I mean, and that's the thing. It's like whenever price is like looking kind of like this, like, and this happens on like before news or holidays, bank holidays, that kind of stuff. A lot of people, like, for whatever reason, they'll still try to trade this kind of stuff. And it's like, if there's like huge wicks like this, I'm either going to go to the 5 minute, see if it's cleaner, or I'm just going to avoid it completely. Because 9 out of 10 times what happens is like after moments like this, you'll see clear structure like in the candle formation itself. And that's like a better time to get in. But, I don't know. It's just one of those things where it's like, if there was a 4 hour here and then a 4 hour whatever down here, I'm drawing kind of fast. It's like, okay, this shifted to the upside. Yeah, but it's like the 4 hours down here. So it's still the expectational order flow would be short. But this high going might throw people off. Not the best example, but I think you get the gist.
Yeah. I think it's like...
What's that?
I think, I think we were dealing with like a really weird time in PA, because I started going as hard as possible once I had the data behind me. And then I was actively trading end of September, October, and then November as well. And that's where I began to where I saw the percentage returns of what I could actually do when I made almost 20% in between October and November. And then as the price action became more erratic, but one thing, keeping in mind the CBs and, the fact that supply was still in control daily and weekly up until that, like, I would say now we're beginning to see demand really take hold with the demand on the daily, disrespecting daily supply. And then we're seeing to continue, our ways up. But keeping the CPBs in mind, I think a lot of people would take the CPB that we had already seen on the 4 hour, not keeping in mind that the daily was up at the very extreme. We had a lot of room to go. But a lot of people would think, okay, here comes the CPP, let's trade the reversal. And then it would show something like similar on what the leg you show. You see that big dip down in the middle of the bullish push. They would think, okay, this is a clear sign of reversal. Let's enter here. And then, they would just get stopped out. So now we're kind of entering a much clearer phase of, if we get alignment again, the same way that we had, I think, from January to about August, September, if we can have where we were aligned bearish across the daily, the weekly, the 4 hour, and the whatever time frame else, whatever other time frame you wanted, then you didn't really have to have such a big worry of reversal from every opposing zone. Now we're kind of getting a much clearer direction, even with the volatility.
That's true. And the best part is you can apply it to whatever time frame you want. Like if, obviously it takes forever to play out, but all these supply zones in here were just catalysts for pullbacks. And before that, to the left, I mean, this is a little bit more extreme, but all of these demand zones were just catalysts for pullbacks. Some pullbacks were deeper than others, but all this, right? All that was gone. Same thing with here, same thing with here, same thing with here. Even on the flip side, it's to an extent, right? Countertrend is always a little bit more tricky. It's here, it's this, all this isn't used as internal range liquidity, but these kind of low substructure points where this was, this definitely was. But I don't know. It's all, these, again, I feel like all these different concepts, I always wonder, how much of it I always wonder how much of it is I'm just kind of speaking, talking my book kind of thing, where it's these are the things that work for me. I know they work for me, but it's will it work for other people? Because so much of it is dependent on the ability to spot the pattern. And if you can't, it doesn't work for everybody. And I don't know, that's the tough part about a lot of this stuff in general, is some people just don't get it. Some people just don't see it. But, it's try to build kind of a recipe, or at least hopefully people, listen to this stuff and they just kind of see the process behind it and be well, a lot of this stuff doesn't make sense to me, but, knowing how it's kind of discovered, maybe I can figure out my own way and come to my own conclusions and, I don't know, just trade somewhat profitably somehow. That's kind of all that really matters, but it's kind of the hard part about being somewhat discretionary, I guess. We're not obviously purely mechanical. There's a lot of puzzle pieces, and you only need a few. But it's just one of those things. But
I get that, man. It's kind of a big threshold for me was kind of I think it's James Clear who said it. We get in the way of progress by looking for perfection over good enough. And I kind of realized once I got to that good enough stage, that's when I could really start to make progress with those. Because if you find something that works for you, for example, I wasn't able to trade Tricky on the 1 minute for shit. I could not get in the way that man would get in. He would find his last point of supply and sweep in a haystack. He was AG, and he still is. But for me, it was always, I was either the least aggressive models on the 1 minute, or I would wait for continuations to develop halfway up the leg. If I'm correct, Aaron or Noah, he kind of trades a lot more continuations. So that's the style that I had to find out. It wasn't so much, it's I don't have to try to replicate exactly what you do. That's why I don't literally just mark up the demand, find the reaction and the sweep of reaction, or enticement after that. Because it's not for me. I've tried it. It shows up quite a lot and it's very profitable, but a lot of the time I'll either see it in hindsight or after it's already presented itself. But then I found out what does work for me, and then it was more about, okay, I know I can't trade ranges for shit. I'll leave that to Blackwatch, but the continuation after the range, that's all mine.
Yeah. I mean, that's all we want, right? That's all we kind of strive to do, is just give people the kind of ammo or the arsenal to figure out how to make it work for themselves. Aaron, he's like my mirror. I feel like when he first joined the community, it was everything that we kind of talked about, it was just it was he was inside our heads. So it was that was always kind of weird, which is, he's such a strong trader. I think he just sees, I mean, he's here now, so he can speak to it, I guess. But I feel like he just kind of, no matter what I put out there or what I said, he just seemingly instantly understood it or could see the same exact thing. So, Aaron, if you want to, I don't know if you're actually on the mic or not, but yeah. Hello, Nora.
Oh yeah, I'm not at my normal setup. I'm on my laptop.
Oh, okay. How you doing, man?
Yeah, I'm good. Very well, thank you. It's been a good chat. I've been enjoying just listening in.
Yeah, it's like a live podcast.
That's brilliant. I don't have anything to add, by the way.
What's that?
I don't have anything to add to what you said.
Okay. Fair enough. I am curious how some other people are kind of holding up. I know. Wouldn't mind talking to Shane. How you doing, Shane?
Yeah, good mate. Yeah, just listening in. I'm on laptop myself.
Everybody's mobile.
Yeah, I'm good, man. Good.
You doing well? That's good.
Yeah, just taking it all in from the gaffer, like.
Good, man. Good.
Yeah, no, good stuff. Good chat.
Who is anybody in here new? I feel like there's a few new people. There's a lot of new people that I've kind of been seeing for the last couple of months, so there's not a ton of new people. Oh, Audie FX. Putting you on the spot, man. How you holding up?
Yo, good to you.
He's got a mic. What's
yeah,
up, brother?
I'm good. Fine, you? Just on with work.
How you doing? Where are you from?
Netherlands.
Netherlands? Cool.
Yes.
You got anybody else from the Netherlands? I feel like we have...
Probably not.
Yeah, I feel like we have a few. We definitely have a pretty big, like German. I think we have a pretty big German.
Eric's bringing them here.
Yeah, mostly UK, some European. But how you holding up, man? How are you taking the concepts in so far? How long you been here?
About 3 months now.
It's been 3 months. Did you change your name?
Yeah, I think so.
Oh, okay.
First it was just my name, but now Audi FX.
Nice. Okay. I feel like I just saw your name started popping up recently, so that's good, man. But things are coming together?
Yeah, just a lot of practice.
Nice. That's good. Good.
But it will be fine, I think. I hope so.
Okay. Just make sure you track everything and analyze it.
Every day I do my end of day markups and do a lot of practice, watching the content.
Good. Are you doing any live trading or just demo or just back testing?
Yeah, live trading. Tried a couple of challenges.
Okay.
And every time it's a free retry for me.
Yeah.
So I'll end in plus, but not. I'm not gonna make my target each month. So.
You said you are hitting targets, or you're not?
No.
Okay.
Almost every time. Last time I was so close, but I bought a new gaming PC. But it crashes after 2 weeks, so I didn't have a computer to trade from.
Oh, it crashed after 2 weeks.
Yeah.
What was wrong
it
with
was pretty bad. I ordered it with Black Friday, so. Yeah, that was pretty bad.
Oh, that's terrible. Is it fixed now?
Yeah, it's fixed. They sent me a new one.
That's good.
Yeah, man.
Blackwatch. I do have another quick question, because this was one of my resolutions as I came in. Because I've already proved consistency in terms of I have the patience in my execution, I have the patience in my analysis, analysis, and then now I figured out I need to diversify further for the 4 hour 15 minutes plan to work. But I don't want to just gather my data through backtesting. But I also feel like if I stay on for much longer, I'm kind of stagnating at this point. You know, I've proved that I can make the returns on the market in a demo setting. But I'm thinking, I think it would probably be more beneficial, A, so I take it more seriously, but B, so that the consequences are there. Because I think you can kind of ignore a loss on a demo, whereas if you lose money on a trade, then you can't ignore it whatsoever. Would you think it's probably a better idea to move over to the live, even though I'm still fresh enough on the 15 minute, and I will be moving with the data that I've gathered to trade a specific plan of pro order flow, pro 4 hour, these 15 minute POIs coming out of the mitigations? Do you think it's better to just kind of trade that, even though there's I haven't traded that, for example, on the demo 3 to 6 months, test that out, find out what works? But I think I have enough experience trading the 1 minute on the demo that I can go live with the 15-minute plan.
I mean, I'll never really shy away from telling anybody that they should go to live sooner than later, but obviously it's the generic answer of only you kind of know. Because like if you feel that you've got enough confidence from, or at least backtesting demo trading to say that you're profitable, or at least in the sense that you feel confident in what you're trading from like a pattern recognition stance and like just overall understanding the strategy. Usually I tell people like you gotta have an expiration date, right? So it's like 3 months is feel like good. I feel like if you're doing like, just for the people who might want to see like, start to finish the path, like usually I'd recommend that when you're first learning a new strategy, right, you're trying to develop an eye for the pattern, right? So and get your bearings on the foundational aspects of the strategy, so like market direction, POI selection, entry management, etc. Once you've kind of developed a lot of that in stone from the pattern recognition side of things and understanding like the actual confluences, then you can go to the demo trading for usually I'd say like 3 months, right? So before that, you're getting all that stuff down, you're doing your end of day markups. That's generally how you're kind of solidifying those things. And then once you've solidified those things through your end of day markups, you're then doing things like backtesting simulation for however long you see fit, right? But you definitely you don't want to become a professional simulation trader, right? You want to, again, it's like with project management, right? Like if you just have a task but you never set a deadline, you generally just kind of drift into it and like complete it at some point, and it's kind of like aimless. So what you want to do is you want to set deadlines for yourself. Say, okay, on February 1st or whatever, March 1st, whatever, I'm going to assess how I feel about whatever the strategy, or my ability to see the patterns, and then I'm going to shift into demo trading. And then on, in 2 to 3 months, right, I'm going to set a specific date and be like, okay, I'm going to work towards making sure that I feel confident in that sense, right? Because obviously with backtesting simulation trading, it's more pattern recognition stuff. You're not actually practicing things like patience and like, fear of missing out. And those are the kind of things that you get from demo trading and live trading, right? To an extent, you're going to get more of it from live trading. So again, set another deadline and say, okay, I've been either showing profits or I've been taking some losses, but I know where my problems lie, right? And I'm going through assessing and I'm fixing, then go into live. But I think overall, like from start to finish, you should be able to kind of, give yourself enough time. Like, so you could even do it by quarters, right? You could essentially say, I'm going to give myself a full year to really understand, what I'm doing in terms of all that stuff, the strategy and whatever. And then take it into live in the final quarter. And then just say, like, I will trade this with a relatively small account, nothing that I'm going to hurt my financial situation with. And it's purely for data. I'm not trying to make a killing. I'm not trying to make a living. I'm not trying to, like make 100%. I'm just going to trade the exact strategy that I've been practicing for the last 3 quarters or the last 6 months or whatever it is. And then at the end of that period, right, stop your trading. I mean, you can do it as you're doing it, but essentially what you want to do then is you want to go in and be like, okay, here's like my total wins, my total losses, gross profit, gross loss, my net profit, net loss, all of that information, right? That's all data you should be collecting along the way, and be like, okay, overall, I was profitable, or overall, I was break even, or I was a losing trader, whatever. And then you're going to go back and you can do it while you're trading, or you can do it at the end. You're going to plot all your trades. You're going to look for patterns in your losses. And then you're going to say, okay, going into the next quarter, I'm going to keep trading live. And depending on how you did on the first, you can either scale up or you can keep the same account or whatever you want to do. And then you're going to say this, or either I had multiple repetitive errors, or I had one really primary like issue that I kept repeating over and over again. You're going to figure out what that is through analyzing all that data. And you're going to say, I'm going to actively work towards eliminating this particular issue. and then I'm going to reassess and see how I've done. Because 9 out of 10 times, most people are, if they do have a clearly defined strategy, 9 out of 10 times they're losing for the same exact reason, like more often than not. So if you can determine what that is, then you can go and be like, okay, I know what my losses are. I need to actively work towards eliminating them. And then that's how you become basically a profitable trader over time. So that's what I would say. I know it's long-winded, but if you feel confident enough in recognizing your patterns and strategy, go into live. Again, don't hurt yourself financially, but don't also have this grandiose goal of being a super crazy trader and making a ton of money and profit. Just go in, execute your edge, and then just assess.
Of course. Okay.
Sound good?
Yeah, no, that sounds perfect. It was literally a reinforcement, because I was like, okay, I haven't actively traded this 15-minute live, but I know from the testing that I've done that the pattern recognition is in there, because everything that I traded, there was one trade, there was a 7-hour trade, which I had it marked up, and then one of them was, but even deducting that, I think it was the 37, no, I still have the numbers right in front of me, actually. It was 32 trades. It was 15 losses, 9 wins, and 8 break evens. And then the expectancy from that, if I remember correctly, it was 61.18%, all accounted for. So that was just pure pattern recognition, not analyzing up the losses, not even recap of it. It's kind of like Rob made a YouTube video. You can trade with just a positive mindset, because he said a lot of the people who've been learning or going around trading for 1 or 2 years, you probably know how to trade. It's either you're just getting in your own way or you're refusing to look at what you're doing wrong, and that's kind of, in a sense, getting in your own way. And that was me for a long time, where I was like, it's kind of contradictory, but I had this when I was trading Fibonacci's and trend lines and stuff. Although I was getting into trades, I was missing out on so many that it was in the law of probabilities that I could have just missed out on all the winning trades. But when I came to Phantom, I was like, okay, what I'm going to do is actively try to trade, because you need to be in the market to either make or lose money, and only from that will you gather the data to trade it. And then that's why I spent so long doing my EODs before I compiled the data, and then took the data from those trades, made the 1 minute plan, and then when I moved over to the 15-minute, I'm carrying the understanding that I already have from the 1 minute. The only thing I would say that I don't still really get is, you have a lot of confidence in trading CPBs, like the reaction from it. You will trade from that reaction to the CPB. And then sometimes I'm a bit iffy about that. Usually I like to see the sweep or the failure of the CPB before I try to get in. And then also on top of that, a lot of the team, I only use structural liquidity, as in, did this put in a new high or did this put in a new low? That's the only form of liquidity which I really am able to see, because I think that the others are kind of subjective. If you're just using a low that's printed in the middle of a range, then I won't see that as a sweep before the move, because I don't know what's behind it, because I don't understand it. But on top of that, even with the, I can understand it's either a supply or a demand reaction, but then why aren't we using every other supply and demand reaction as liquidity? So that's literally what I was asking. I was like, okay, if I trade the 15-minute, I'll probably demo trade the 15-minute for a month, make sure I'm not doing anything too drastic, ensure that I'm continuing my process of, let's journal the trade, see the similarities between them, not get lazy with it or anything like that. And then I was thinking, maybe €1,000 into an account, because it's money that I have, and it's nothing that I'm afraid of losing 1 or 2% at a time. So it won't do anything to me.
Yeah, I mean, it's one of those things where it's again, we give you a lot of puzzle pieces, and you just have to kind of select which ones work the best for you. So it's if in your best ability or best attempt to be as mechanical as you can, because again, I don't know if you were there, I'm pretty sure you were, but last time, or not last time, but one of the times we were on a Discord call, we were talking about the potential for being as mechanical as possible. And I think what I was saying was, the only way you could truly be mechanical is in the kind of market direction and POI selection phase. And while there's so many different ways to kind of establish market direction via, supply and demand and order flow and your structure pieces, whether it's substructure, off of a reaction to a supply demand, you just have to pick and choose which one that you subscribe to. And just be okay, it doesn't matter if it can work that way, right? I see other people do it. I know some of the coaches do it, but I don't see it. I don't get it. I don't like it. Just don't do it. All right, just
That's
omit
why
it.
I literally just structure. Anything that's put in structure, it's only the high of that or the low of it. And even then, the structure is subjective. You know, everyone can see a different high or a different low. But for me to be like, okay, that's guaranteed, like my structural low, it will need to have more than 3 candles like in the pause. So it will need to have like 3 candles in the pause, either bullish or bearish. Once they're not putting in higher lows or higher highs, I need 3 candles that aren't putting in consecutive higher highs. And then I need at least one of them to close below the low of one of the candles before it. So it needs to be 3 candles in the opposing direction, and then one needs to close below the low of another one.
Yeah, I mean, it's like when you're running a business, right? You don't want to necessarily be responsible for 15 different services or a million different products. You essentially want to have a niche, because when you have a niche,
Exactly.
it's something that you can like properly and repetitively like yield expected results. Like it's something that you can say, within reason, I have a fairly high level of confidence that if I just keep selling this product or this service, that like the people who come to me, they want this. So it's like when you're looking at your approach to the market, it's kind of the same thing. You're like, this setup yields good results. It gives me this strike rate and whatever. And like, I feel confident about that. It's like, oh, well, this setup, I see it a lot, but it doesn't really give me a good strike rate. And that piece of it really kind of irritates me, or like it drops my confidence below a level that's acceptable. So then you need to, again, kind of figure out what those problems are and then determine how you can, address that. So, I mean, long story short, just, like if there's certain things, if you currently have certain things that actually produce results, like predictable results within, reason, you just stick with it, and everything else you just say, fuck it.
Yeah. In order to improve something good, you have to first have something good.
Yeah.
So, yeah.
Well, even yeah, I mean, like to an extent too, you just, a lot of like software companies, they'll develop like an MVP, like the minimal viable product. It's enough to get out there. It's enough to like bring people in and see value in the product and that kind of stuff. But it's sure as shit not the finished product. So it's something that you can refine over time as well. As long as you have the shell of something that, again, can produce somewhat predictable results, then you can refine over time. Like for now, you're heavy on 15-minute stuff, but maybe eventually you'll be like, maybe I want to go back into the 5-minute and lower time frame stuff because it's a refinement. Or
100%, bro.
Yeah.
Once I see my time frame like open up again, like the 1 minute, I felt like, and it's kind of contradictory because I got to the point where where I was aiming for to surpass that 10%, and then the very first month that I got it done, I had to I got the job. Which, not to make excuses, but I was like, I can still try to trade the 1 minute and try to make excuses or reasonings for why I'm missing out on trades, and then have a lot more to explain to myself. Or I can take the higher time frame, well, not higher time frame, but the mid time frame approach of trading the.
Who's that? Sorry, QD, I'm gonna mute you.
Yeah, so I can either, I can try to trade the 1 minute, probably still miss a lot of valid trades and still end up profitable, or I could just trade the 15-minute and then hold myself accountable with why did I miss this? Why did I take this? Or why did I see this when this was really happening? And then over time, I'll have all these whys, and then I'll figure out that, okay, this is how to avoid that.
That's just it, man. I know you've got the recipe for all the right things. I mean, when it comes to live stuff, I feel like you just go for it because it's just such a better environment for learning. Like a lot of people, I mean, I've run into this issue before. It's like when it comes to the fear aspect of it, it's not always fear about losing. Sometimes about fear about like just doing, or even sometimes being successful. Some people have that fear, and I've definitely had it too. It's like, well, I don't want to necessarily launch this thing or do that thing because I don't know what's going to happen, right? I could be really good at it. I could be really successful, or I could be dog shit and I might lose everything. It's just like a general fear that I feel like the only way you get through it is just to like take the leap and just kind of do it. It's like, anybody that has kids right? Everyone's like, "Oh, are you ready? Are you ready for having kids? Are you ready?" It's like, I don't know. Fuck, I have no idea, but it's coming anyways. I got no chance. There's a deadline. It's like I got 9 months, and I think
Product releases in 9 months. Yeah.
yeah, it's like you just are thrusted into it, and then you just get better over time. It's like you're not that fragile. The market's a brick wall. I mean, like it's like you said earlier. It's like you are competing against two things: the market, which you're just straight up. It's like I said, a brick wall. It's a staple. It's a standstill. It's not moving. But you yourself, that's the only variable that you have control over. And not in a cliche way, but it is the truth. Like most people just get in their own way. Like a lot of like startups, again, go back to business because this is the only thing I have really to relate it to. A lot of startups, like they get in their own way. Like they have a good product, but their management skills suck. And instead of learning how to be a better manager or people person or hiring somebody else to do it because their egos are too big, they tend to flop on these things. And while the product is amazing, they have a work culture that sucks. They have people who, resent management, and then their team just deteriorates, and then the product dies because the company sucks. And it's like, it's just stuff like that where it's like you're getting in your own way. It's like, why can't you just realize that you have a deficiency in a certain area? It's your responsibility to determine that deficiency because you're assessing yourself over time. And then it's your responsibility to either delegate that duty, which in trading is pretty tough because you're a one-man C-suite. And then you have, you could essentially go and take a course. You could hire an HR person. There's just options, right? But a lot of people don't necessarily seek out those options. They just kind of repeat the same thing over and over again until eventually that brick wall wins, So it is a matter of just getting out of your own way. And I've suffered through it myself plenty of times. And it comes and goes. And it's something you kind of have to check yourself every now and again and just kind of remind yourself to like, oh shit, I'm losing this battle. Let me do something different.
Yeah, you can't really it's kind of like how Russia fights wars. You can either be smart or back in the 1940s they just threw people at the solution. And while that does work, there's probably a lot of traders who are like, okay, I'm going to repeat the same all in. A lot of the time it will just be ruin. That a lot of them encounter. And I've never really had to deal with not so much the FOMO. Like I can understand that if I see somebody in GU has taken a 20 or 1 minute trade while I was chilling waiting for my 15-minute entry, then I get that and I can be like, oh shit, well that would have been nice to be in, but I've never really had that fear of, oh my god, I'm missing out, I have to get in now, or I need to leverage more so I can make more. So that's where I think I'm kind of in tune psychologically that I don't fear over trading or something like that. I always have the strict rule of, okay, if I take 2 losses, I'm out for the day, even if the most beautiful entry presents itself, and I can kind of remove myself from it.
Good. I mean, that's important. I mean, honestly, even when I'm in, I have to close Discord a lot of times because it's not so much a FOMO thing. It's almost like, and it's like I like to say I don't have an ego. I pride myself on not being egotistical, but it doesn't change the fact that if I see a bunch of students in a trade that I should probably be in, I'm like, oh shit, I should have took that trade. I feel there is a feeling that is associated with seeing that stuff sometimes, and it's not like the end of the world. It doesn't mess with me too much, but it's just I wonder. It's because everyone's like, oh, Blackwatch, you're in this trade. I'm like, no, I'm not. But it is what it is.
If you ever want to ground yourself, you just got to look at those shorts from was it April last year?
Oh. Wait, I was in those.
You were. That's why I'm quoting. Man, me and my friends, we have a little trading group. I was like, this is the shit we should be aiming for, and it's like this picture of the daily chart. I'll see if I can find it because me and my friends had a good laugh about it. But I found it here we are.
Oh, yeah.
How do I send pictures into support voice?
That's a good question. You're asking the wrong dude.
How do I even access that chat? Okay. I hold my thing. Yeah, these ones.
How do I even look at them? That's a real question.
It should show up a little pop-up. Or if you click it, if you hold your mouse over Trade Floor Voice, there's a little chat, open chat. It should show up beside it.
Oh, I see.
Yeah, that one.
Yeah, man. I was just hitting it.
He's an animal, man.
Well, it's everything that the thing is, it's just everything was so clear. So like when a lot of the times, I mean, like not a lot of times, because I feel like more often than not, it's not always super obvious, but sometimes it's really, really, really obvious. And for this one, it was just unbelievably obvious for me. I was like, holy shit, like this thing's going to melt. Cause we had the bearish price action, right? We had this low go. We came up to the extreme of this. All this internal range liquidity was gone. We swept external range liquidity in the supply zone. This took forever to set up, but it happened, right? Yeah. And then if you go to the 4 hour, I think pretty much everything was on the 4 hour and daily. I think it was actually more so the daily. But like from here, right? Look at this, like demand reaction right here. And this is already after supply held and demand failed before. So it's like, I already have a pretty good idea of where price is heading. And then we had all this internal range liquidity. So we had this demand reaction. We had the sweep right here, literally textbook setup on the daily. And then it just like, it came up for the POI right here.
Why is that a sweep for you? Like, I do have that question. Like, yeah, why is it, like, I understand it's because it wicked above it, but there's no structure. There's demand, like there's the supply, like the flip zone is created obviously as a reaction to those sell to buy wicks, and then that pushes up. But why is what got swept? Why is that a sweep?
For me, I haven't drawn it here, but what's happening is you have a supply reaction. So this is demand, and then
and then it creates that flip, and then the flip gets swept. But is it just because the flip is there? Like, what is
pretty much? Because I mean, the way you're looking at it is you're looking, because like it could have easily been this one, right? It could have been, well, I mean, this reacts to this inside bar, but this isn't a reaction to like, you know, the extreme of this leg here. This is a reaction to this bigger range, right?
It's a sweep, so it's a reaction to an extreme.
It's preferred.
Yeah.
Yeah, but I mean, it's all data, right? So you're like, you would look at this and just be like, oh, well, what's happening in the reaction? Is there a setup? If there is a setup, you take it, right? I definitely took losses trying to get into these shorts. You know, like it wasn't like I hit the one trade and I was just in it. You know, like there were losses involved too. But it's one of those things where it's like, as price develops, you'd be like, oh, like this is what it was doing. I think this makes more sense. Like, and the thing is, it's like all that really matters is like, even if you didn't see the sweep ahead of time or determined it as a sweep, you still have this demand reaction and failure. Sure. So then it's like, okay, well, where's the reaction? Where did this reaction lead to? It's like it led to this, which is part of like this supply chain here. You could even say that this was your sweep, right? So it's a little bit more fluid, I guess, and not exactly like the most mechanical thing. But again, this is where the discretionary stuff comes in. But it's like all you're trying to do is justify what's going on. So then all of a sudden you have this, and then it's like, well, it also swept this reaction. So again, you're just kind of adding more confluence to it. And then for this failing here, I was like, holy shit, like this thing is going to die. And then, yeah, it was just like, we'd break the low, we'd pull back, I'd look for more entry, we'd break the low, we'd trickle away. Remember how I was saying before, like if you have these large imbalances on the bullish side and then on the backside, whether it's a window of imbalance or not, price often likes to kind of trickle away. So looking at these supply zones that were built kind of more in quote unquote recent price action, like back in March here, right? That's reason to get in here instead of waiting for it to pull back. If it pulls back all the way, obviously you try to get in again, but you also have to be aware that it might just do this. And that a lot of that has to do with, again, for anybody who's curious, you can do this, you can do the window of balance thing. I don't know. It doesn't really matter. You're just marking up to say like, oh, I got huge imbalance on the upside, huge imbalance on the downside. More than likely what's going to happen is price is going to react to the range. Right? So we get that reaction here, price pulls back down. This reacts to, again, a bit of this range, and then it just kind of trickles away. Right? And you even have it here. Technically, this like large kind of imbalance. Not large, it's there. Maybe not super prominent, but you can sort of see it.
So and then when price is coming into these kind of ranges, like what tells you like when price is coming into these large ranges, okay, for example, you know, if you're going into that range there, And you see how price kind of gets tighter as it reacts to that range, and then it slowly trickles away. Yeah, exactly.
Yeah.
Like what's not so much telling you, but like see the way it's just a large range at that point. Wouldn't you be looking at the POIs that are up higher? What kind of stops that fear of inducement to you? Obviously, it's the daily, so it's a much larger time frame, and the reaction kind of happened for anywhere. But what's your process as you're entering into those zones? Are you just waiting for that model to set up and then just take it anyways because probabilities, or is there a certain kind of mindset that you take? Like, especially since
go ahead.
It kind of sorry. See the way it has that large push up, and we know that it mitigates that extreme, and then we can see that push downwards. But we can also see that how many supply zones did that push upwards take out? The one that you don't have marked out, the one that's right before that large supply zone, it takes out like it takes out 3 supply zones. Yeah, exactly. It takes out 3 supply zones. What kind of gives you the confidence that that wouldn't have just been, okay, it's CPB season, you know?
Well, I mean, in this regard, we're bearish, right? Because demand keeps failing. We got bearish structure.
Yeah.
So
and then the high gets taken.
We know that generally our counter trend plays come after taking out the pro trend, in this case, low, right? Yeah. So we have the extreme. Like price could have easily just come off that first level of supply and continued down. Mm-hmm. So you'd mark it up, and you'd either get an entry or you wouldn't, and you'd either take a loss or a break even. But you also have to be like, okay, well, this one failed, so or. I mean, this would probably be liquidity. Just we're not.
Yeah, that would be
totally whatever here, but yeah. So I mean, like this would probably be the better supply zone to look at, just because of this, whatever. And maybe you'd get a setup, and then it would fail because you'd get a CPP. It would probably shift to the downside. This looks like a 15-minute shift to the downside here, and like we were talking about earlier, price just continues up through it, right? Because it's just it becomes a catalyst for pullback. This one here. Like you can mark it up as supply either way. But
that would have been valid supply, and then the next one would have been CPB.
Yeah, and then this one's like guaranteed a CPB, right? Like it shouldn't do anything. And then you have the extreme, the part of the supply
because we're still bearish. We will probably respect that. Okay, yeah,
perfect. Yeah, and that's what gives you the confidence. And then here it's like this is like my low. But in the same regard, it's like this is just. On the 4 hour, there's probably a lot of internal range liquidity here, and you'd be like, well, the low is supposed to go, and there's still remaining internal range liquidity. So then it's like you get basically a flip in here, the reaction. So you get the supply zone, and then you start to see price trickle away. And it's just one of those things where it's like you have the higher time frame bias in your mind based on, I mean, a lot of it has to do with this right here. Because of this setup and then this failing, it gives me confidence to short all of this in here. I might take a loss early on in this or a break even or something, and maybe I don't catch an entry here. But when price makes its way, like kind of confirms to the downside, that's what you're looking at. And again, when you have these large imbalances, you can do two things. You can mark the extreme, you can mark the decisional, and you can just see how price develops within it. And maybe you take a loss here. Maybe it comes up to this. Maybe you're completely wrong. It just keeps going up. But it's one of those things where it's like, you have confidence in the pattern, you've seen it enough, like based on what's going on here, which is like the primary like best setup for me as my bread and butter, setting up on a higher time frame like the daily, like I'm going to do as much as I possibly can to get in and continue to get in because I know that I have the potential to take out the rest of this internal range liquidity because the overall structure is bearish. Yeah. All those things kind of come together to say, like, let me short the shit out of this and like see how long I can hold it. And I mean, that's kind of how it works. So
yeah, I get that one. So it's just kind of you got to weigh the sides of each side's story, like the power of each side's story, and then you just go with whichever is stronger, and of course not anticipating but reacting.
Yeah, I mean, pretty much. It's especially when you're swing trading, like. I mean, when you're swing trading, it's for me, it's mostly just daily zones, daily structure. Like obviously you're going to look at the higher time frame mitigations, like the weekly or monthly, like this here, and then kind of see what's happening, like in terms of the reaction, the structure that's forming afterwards, and then from there you can just be like, oh yeah, okay, I feel confident that I'm trading short here. But it's like, here, like again, these large imbalances, right? We found a lot of impulsive price action, basically taking out like this little demand chain here. right? So it just rips straight through it, and then instead of pulling back all the way, it kind of trickles down and plays kind of the more immediate price action. It's standard. But early on in the phase, right? Early on in the shift, it's like if you have like overall bullish PA and then you hit something that starts to shift price to the downside, you're getting confirmation. These early structure shifts are the best time to get in, because once you start like the theory, again, I'm not an institutional trader. I don't trade with the banks. I've never had, don't have any experience. But like if you think about it logically, right? The reason hedge funds and banks don't make 30% a year and whatever, and people love to harp on this, like, oh my God, I'm a retail trader. I made 20% this month. I'm beating the banks. Well, yeah, you also don't have trillions of dollars where you need to scale in your position over long periods of time. Like that's the problem. They're not going to make 20% on $1 trillion because they simply can't fill that many orders. You have to have. It's so stupid. I hate it when people say that. It's like, dude, what are you talking about? You have no idea what you're talking about. There's just no logic behind it. And it's like
the $100 trader who makes $1,000 versus the 100,000 who makes 10,000. It's like, yeah, bro, you outperformed them, but you risk 90% of everything you had every time you did it. And there's only so many times you could win the roulette.
It's just stupid. It's just pure stupidity, because it's like, if you think about it, you cannot buy the market unless somebody's selling it. So when you have such large capital like a hedge fund or a bank would have, like JP Morgan, like you need people to sell the market for you to buy it. And the only way you're going to do that is if you move price with, however many billion it takes to move it 10 pips. And the only way you're going to get your full position in is to continuously like mitigate price in our case, right? And then get back in. So you're adding to the position. It's the only way. And then you have to factor in the fact that there's multiple hedge funds, many hedge funds, many banks. It's not just one guy doing this, right? So it's like they're competing against each other, or maybe they're working together. Who the hell knows? But at the end of the day, it's like, people are like, oh yeah, making so many percent and beating the banks. It's like, yeah.
Blackwatch, did you know you trade like the banks, bro? Did you know that?
I am the banks.
That's something that's bro, you are the market. That's something I always found funny is like other SMC traders, they'll talk about, oh, I trade like the banks, and it's like, no, you trade the footstep of the bank only because we're able to, like, the only reason we're able to do what we do is because they do what they do. And it's the fact that they meet the equilibrium of the supply and demand paradox, and then they put their position in of billions on billions. And then we're able to.
This is what it looks like when the banks aren't involved. Where is it?
Yeah.
Right here. This is a bunch of retail traders still trying to trade the market open when there's nobody trading it with any money. Like, this is an extreme example, but that's essentially it. It's like if all the retail traders are sitting out there trying to trade and stuff, and the banks were never involved in whatever, it would just be this. It's like crypto when crypto dies. Like, no one gives a shit.
Either that, or else it's the polar opposite of it, with the huge spikes in volatility, like the Russian ruble, when everything happened, like, exactly. It's like, okay, the next sizable order that can match whatever people are trying to do is all the way down here. We're going to have to come.
It's just like this though, because it goes down and goes straight back up. Yeah. It's just like these large.
Exactly. So stupid. And then they're talking, oh, bro, I outperformed the banks. It's like, yeah, you made 10,000 while they took home about $250 billion. Wow, good on you.
This worked out. Everybody take this trade? I'm still kind of in a phase of getting my chops kind of back in action. I've been trading for a while, so I'm just kind of forward testing as I'm kind of building up my muster to get back in. It's just kind of what I do every time I take a break. It's part of my, I guess, process. So
no trades. Warm up before you fight, bro.
Yeah, man. It's like when I played football in college and stuff, like, or even whatever, anybody working out at all. It's like if you don't stretch or like warm up before, and you're gonna pull something. I'm not trying to do that. Why did I choose this zone and not the one above? Are you talking about this one right here? Metal King, X-Metal King. This one here is because, again, is if you kind of were here for the other parts, what do we have? This large imbalance to the upside, large imbalance to the downside, meaning price generally does not pull back to the extreme. It likes to play with the kind of more recent order flow. And if you look at this, right, we had demand fail here. So we have after hitting a POI, so we have confirmed bearish price action. The initial reaction to this demand is this guy right here. And you can kind of see it's chaining. And if you want to add a liquidity concept here, you basically are sweeping this high. And it's part of this chain here. So let me fully mark it up for you guys. Right, you can look at it like this if you want. You can look at it like this because that's part of that chain. Right, and then that initial reaction is kind of what gives us our signal, like that. We're looking at this PA here. We're just kind of seeing what happens here, and then how price interacts with it after.
It'll be induced though, couldn't it? Like that could still be all have been used as inducement for the extreme, but the extreme would have been valid either way. Like I know that's your model. Yeah. That's why you were looking at this. Okay.
Yeah.
Perfect.
Yeah. This extreme could easily play. This could have been internal range liquidity for this like little mini leg, and it could have played this extreme as part of this chain. But again, what you're going to do is when you have that large imbalance on both sides of the market, is you're just going to see both sides. You gotta be able to prep for a more kind of volatile or whatever you'd want to call it, like something that has a little bit more momentum behind it, and get in on the decisional and be prepared to take this if it goes to the higher level. I was looking at this one because of the liquidity. You mean like this here being liquidity?
That's Metal King. He had a screenshot I think he sent in, or a trading view link.
Yeah, I mean it's not wrong, right? Your idea is not wrong. It's just when we're looking at continuations and decisional points, what we're doing is following, quote unquote, the order flow. And that a lot of that has to do with these demand reactions before they fail. So we knew that this was a catalyst for pullback because it's in the middle of the leg, and that's just the concept, right? And again, we got that bullish structure. I'm sure some people took longs in here. This one actually provided a decent long into the zone, but it was never going to take the high. So, in this case, this is the best way to do it. Now, what I used to do like way back in the day, I haven't done it in forever, but I used to call it the triple play. And basically it would be, you would take the counter trend play back into the zone after you know exactly where it's going. You take the risk entry, and then you take the confirmation entry. That was something I used to do a lot, but then I started losing too much. This one set up, so it was kind of nice.
Cool. Thanks for explaining.
Yeah, man.
Blackwatch, can I ask you a few questions?
Who is talking? Sorry, I like to always kind of know who I'm talking to. Who is that?
It's Meg Jackson.
Meg Jackson. Is that your real name?
No, my real name is Phil.
Okay, Phil. What's up, Phil?
Yeah. How you doing?
Good, man. What's up?
I'm currently studying the last few videos, and currently I'm asking why the price action review process by Wise. And afterwards, I decided to watch your content because I was trying to trade EU, GU, and AU, and I was so confused at the end of the day. Then you said something like, just focus on the extremes, and this helps me a lot to view it in a different way, and helps me a lot avoiding my FOMO I had currently, but I think slowly I'm getting it under control, and I'm starting now my EODs. And I just wanted to ask you if I should go deeper when I do my EODs. Should I go deeper than the M15, and should I decrypt more or less like the M5 and M1 too?
Is that something realistically that you have time to kind of monitor and trade in a live environment?
Depends on the days. Like on Monday, Wednesday, and Thursday, at the gym. Like, and then 4 o'clock German time, I'm home. Then I could trade.
Yeah. So primarily the way that I would look at it is just be like, when I'm actually trading live, trying to make money, whether to supplement my income or replace my income, what do I actually have time for? Like, and then you want to just basically kind of simulate that in your testing. Because I mean, not, you know, this isn't particularly for you, but like there might be people who are like really gung ho about the 1 minute, but they're like working 9 to 5 and like, shit, I spent all this time trying to get a 1 minute entry, but in reality, I probably should have been focusing on like 5 minute stuff or 50-minute stuff. So, you know, just assess that. And then if you can, and you do have time for the 1 minute stuff, I would recommend that you kind of start from the broad, complex kind of nature of everything. So learn as much as you possibly can. And then over time, kind of pull back a little bit, because you can't really go towards a simplistic view without really understanding all the complexities of it. Because what you want to do is you want to essentially kind of dabble in everything, get a good idea of what your strengths are, and then just try to, again, niche down with that, like really hone in on those things. So like, again, you're going to want to determine, you know, like specifically, how do I determine market direction, and find like a very, you know, maybe again, go through the complexities of that and then try to find a simplistic way that's like manageable from a day-to-day perspective, and then do the same thing with POI selection, and then do the same thing with entries. But for the most part, it's probably better to allow yourself to understand, like get a deep understanding of everything, and then try to find a simplistic way to approach the market.
Oh, okay, perfect.
Does that make sense?
Yeah, it makes sense. A lot of sense, actually.
Cool. Yeah, did you have another one? I know you said you had a couple questions.
Yeah, I have another one. Like, if I'm then going forward to my markups, my what's it called, case studies, I just wanted to know which entry models do you use, and which entry models I should focus on primarily.
I pretty much use everything but chalk. The chalk thing is just, it's too aggressive. And it's not to say that it doesn't work, but I think a lot of people I think the issue for other people is that a lot of times people sit on the 1 minute, right? It's like, if you've been watching me today, I don't know if you can actually get into this. But like, I'm generally sitting on the 15-minute, 5-minute, waiting for price to develop, and then I'll go to the 1 minute. But the problem is, when you go and sit on the 1 minute, you'll see any and all of those entry models setting up all the time, all over the place, right? So for me personally, I like the ones that are kind of in the middle of the aggression level, right? And then slightly more towards the aggressive side, because I just like to get in a little bit earlier, especially because I like to trade news events. Like, a lot of people avoid news events, but for me, you know, if I have a news event like in 3 or 4 hours, I might find like a really nice early setup off a strong POI, and it allows me to get into a trade while price pulls away from my entry. And then it gives me a bit of room, so that way, if there's a lot of volatility with the news event, I can be relatively safe and potentially either take a nice break even, or, you know, capitalize on whatever the move is. So, you know, generally speaking, I strongly advise against the more aggressive model of chalk. And then if you are more conservative in nature, right? So a lot of it has to do with your trading personality, how you deal with FOMO, how you deal with patience. You know, like, if you are a relatively patient person, you're going to be able to wait for more of those confluences, wait for the floor setup. You're going to, you know, wait for that confirmation. But if you are kind of quick to react, and you just kind of want to get in because you like being more aggressive, then, you know. And so basically, long story short, it's sort of up to you. They're all super viable. For me personally, I do tend to be more in the middle of that spectrum, leaning slightly more towards the aggressive side.
Oh, okay. Yeah, I'm more the conservative trader, I think, because I like to protect my capital. And
yeah, totally.
And my third question would be, if I'm done with the course, I recognize that I need to get a better understanding of market structure of the 15-minute. In the daily, weekly, and 4-hour, I feel comfortable. The liquidity concepts, I need a better understanding. Order flow, definitely. entries and management for sure. And yeah, this is what I have to learn, and this is what I sit my ass down on the weekend and learn it and choose some other pairs and try to figure this out. And would you, or what would you recommend me to watch first to get a better understanding of the strategy and how to trade the GBP USD from your videos? Because you're some type of guy. You are so calm-minded, and the way you speak is like giving me calmness. And I'm looking up to you. And no, you don't. You give the way you speak. It's like so calm and so nice. It's like incredible because like I've been more of an explosive person, but throughout my trading journey so far, I got way more chilled, and I know how to argue better and talk better and think rational.
Okay, nice. I mean, honestly, I can't remember. I've been making videos for like 2.5 years. I used to make 2 videos a week, and then I started doing it every single weekend for the last like a year and a half or so. So I'm like, truth be told, I don't know. You'll have to ask the community because I think a lot of people have
every single
videos.
one.
What's that?
Every single one of them, bro. Watch every one of them. All at the same time too. Open up 32 tabs and watch every single one. You will become the best trader of all time. I promise you.
There's definitely some videos that hold a little bit more weight, like that might be more encompassing of like the entire approach, and then some are a little bit more I don't know, specific. But I don't think I particularly label them very well in terms of the titles. So, but there's definitely like a few videos that I think some of the community members are like more more particular about that have helped them a little bit more. But I couldn't tell you. You'll have to ask these guys.
How to structure your journey, the podcast one, that would be an excellent one if you're brand new. And then there's a one that's a bit older where he talks about mindset, journaling, and that kind of stuff. Tough Love, I would say, is the one that you should watch after that, and then Processes. So those would be the ones that I would watch first, and the rest are, some more so like price action analysis, so you can see the strategy in tune. But if you watch it in that order, you'll understand how he trades, how he looks at it, how you should be looking to trade, like asking why, that kind of stuff.
Can you say it again? How to structure?
Pardon?
You made it like a list, and I tried to write it down, but it was a bit quick.
There's titles. The best ones are usually labeled. So he says he doesn't have them labeled out that much, but like most of the ones that have just like kind of general titles, like for example GUPA or something like that, or November 2nd FOMC shorts. Those are the general PA ones where he'll show, the reliability, the consistency of the strategy he's using. But there's one that's literally called How to Structure Your Journey. That's a podcast one, so there's not much PA happening on it. A quick approach to trading mechanically, that's the most recent one. It's also really good. Problems.
How to approach. Sorry, how was it further?
How to structure your journey.
No. Yeah, got it.
A quick approach to trading mechanically.
Quick approach to trading mechanically. Yeah, got that one.
Discord call, mindset, journaling approach.
Perfect, got that one too.
And then problems and solutions. And then those are probably the most impactful ones in like going off of just what they are from the outlook. I wouldn't be able to, same as Blackwatch, I can't tell you the gems that are dropped on every single one of them, but there is something of value in every single episode, without a lie. But those are the ones that will help you kind of structure your mindset and what way you want to approach things first, because if you can get that kind of mental block of, I don't know what I'm doing, and then you just start throwing shit at the wall and seeing what works. If you have the correct mindset for your throwing of shit, then you'll hit a lot more times than you miss. It'll save you an awful lot of time by watching those and really applying what he says.
Okay, perfect. Thank you very much. And would you recommend me watching the old ones to the new ones, or the new ones to the old ones?
Anything, bro.
Anything. Okay, perfect. Thank you very much, man.
Of course.
Thank you
Another
very much.
really
Also,
good one is Nora. He has a video on EODs, so I would recommend that too. It kind of gives you an insight of what you should be doing and what you should be looking at.
the one in the course contents, you mean?
Yeah, I think it's just called EOD process, Nora.
The process. Perfect. Thank you very much.
Of course, bro.
And thank you very much, Blackwatch, for answering my questions and talking to you.
You are welcome, man. No problem.
Thank you.
I do have to go. I got another call in like 45 minutes. I need to eat something, but as always, guys, I love talking to you guys. It's always good, you know. I feel like I didn't give signals, but I know there's some people got in this short. But I hope you guys had a good trading day today. What's today? Today's Wednesday? Oh, yeah. What's tomorrow? CPI, right? Yeah, CPI. That'll be interesting. CPI moves, man. CPI moves a lot. So it'll be fun. For the most part, do you guys kind of avoid news?
Hey, Brian.
Who's that?
It's Fenice or Carol.
Fenice. I don't know if you're being incognito or not. What's up? How are you?
Oh, I'm good. I'm just responding to your CPI question. It's my favorite day of the month now.
Mm-hmm.
I have it labeled up in advance. I try and get in a move beforehand. I agree with you that, you don't want to trade news like right off the bat when you're starting out, but I love CPI day. It's my favorite day of the month, hands down.
Yeah, it's interesting though because it's like it's New York Open, so it's session open plus high impact news. It's like so much volatility.
Yeah, well, it's when you need to get in kind of the day before if you can, or early London. I know that's tricky for you. Are you in Texas now, Brian?
Yes, ma'am. Sure is.
Wow, everybody moved to Texas. My investors in Texas, like, it's the place to be. What's happening about Texas? Like,
no income tax here.
Yes, right, nice. Yeah. Wow, good job. So no more Washington. When did you move?
Well, it's been like a year and a half, 2 years. Probably. I think right after you left the community.
Right.
Maybe no, you were definitely here because I've been here for 2 years almost.
Yeah, I went incognito for a while, just head down to try and do the work, which is what it takes, I think.
Look, there's a saying, I can't remember exactly what it is, so I'll butcher it, but something along the lines of doing work, individual work or something is growth, and doing it in public is business. So I think a lot of people need to focus on growth.
I love that. So true. Everything happened for me when I disappeared. Really disappeared.
Yeah, it's awesome to see the progress.
Yeah, you just have to do you just have to serve the time. And I think if I could say one thing, I'm funded now, heavily funded. I don't have prop funding. I don't like the prop funding process, but I'd never thought of kind of approaching private investment. Actually, they came to me, so I have some really nice private capital funding.
Nice.
And that just comes from sort of putting your head down, and everything is available in the community. You just have to go quiet, I think, and just do the work and serve the time, right? It just does pay off. It's incredible. Like this morning I posted my charts. I don't post them from an ego point of view. I know some people find them helpful. But everything you taught me, even my original YouTube video, I've lost that, Brian. I need that again.
Really?
Yeah, I don't have it anymore, but all the video content is just superb. It's like everything you need is in there. And I agree with is it Letterman who was chatting? You can watch your videos over and over. Just keep watching them because you do miss so much. But the more you watch them, eventually things start to click. It's like saying to a kid, "Don't put your hand in the fire," and you kind of say it over and over again. And you just have to keep doing it. You just have to keep doing the same thing over and over. And it sounds trite, but it's true, isn't it?
Yeah, there's a study by Google. This is like more of a marketing thing, but the average time it takes for somebody to trust something, there's like a number behind it, and that number is 7. So, like repetition again is such a big piece of all this.
Yeah.
And I mean, it's just what it is. It's just fact.
Yeah, it's like anything, isn't it? Racing, anything you try and master. Like, I watch a lot of kids when they do stuff. Kids will learn something and they'll take 7 years all through their kind of primary education or their secondary education, and they'll master something. As adults, we're so impatient, right?
Yeah.
It's ridiculous. But I'm just so grateful to the community, and happy to help anyone who hits me up, DMs me, if anything I can do to help anyone. I'm grateful to be here. I'm grateful to you, Brian. You were my original mentor. It's awesome to be back in the community.
Appreciate it. Thanks. And I mean, like, it's super helpful when the community helps out. And I mean, if I'm any testament to it, like, supporting other people has like instilled a lot of confidence in my own trading. So it can be beneficial to you.
Yeah, I agree with that. I'd never want to teach like you guys, but I do think that explaining something makes you a better teacher, makes you a better trader for sure.
Yeah.
And especially if you're going to post some charts and somebody's going to hit you up and ask you about them.
Yep.
And also, my investors, sometimes one of my investors, he's like really interested in what I do, and that makes you really accountable. I absolutely every single day do my Notion, because one, it's accountability for myself, but sometimes my investor will say, hey, can I have a look at your Notion reports? Actually, he has a live link to them, which I think is just so good.
That's cool. That's awesome.
It's really just discipline I've learned from the community, and you, Brian, and Phantom, and Tricky, and Aaron. Everybody's been instilling the same message. I'm so grateful.
That's awesome. I mean, it's like it's one of those kind of mottos that I stand by always and forever. It's articulation builds clarity. The more you write stuff down, the more you talk about it, the more understanding of it that you'll become, and it's just going to help you progress faster. So even if it's just yourself doing those end of day markups, the case studies, analyzing your journal, like actively going in and speaking about what you're trying to learn, it'll help you learn it faster for sure. Because you'll understand it better.
Yeah. It's kind of like I describe it as trying to learn Chinese. You don't just have, I learned lots of languages in my life, but Chinese has a whole different font face, and trading's the same, right? You just have to keep chipping away at it, and eventually you get there. But you have to detach from the outcome, and it's so easy to say that but not do it. You really have to, and I think you do. I personally, I don't know about you, Brian, but I personally had to do that, completely isolated from the world. Detached from everyone. I became a complete hermit for about 6 months. I just didn't want to talk to anyone. I just wanted to really master the trade and get to grips with the acceptance of the time it takes in the. I get hit up by so many guys, girls who say, I've been doing this for a year, it's not coming, and I'm like, wow, you want to know how long I've been doing this? It just takes the time it takes, right? You can't put a time frame on it. So worth it.
It is definitely a time thing, but then also some people are just not a good fit for product, unfortunately. It's just one of those things that's like undoubtedly there's people who put in a ton of work and it's still not clicking. You never know if it's like quote unquote the right kind of work, like if they're putting their efforts in the right place. Because again, the whole cliche of you could be going fast or slow, but if you're heading in the wrong direction, what does it matter, right? So it's tough without getting into their head, which I think something like journaling is the best way to do it. Like if I ever did pick up coaching again, which I've toyed with the idea because there's a lot of demand for it, but my biggest issue is I don't like teaching technicals because it almost doesn't really matter. It's more so like there's a bajillion strategies out there. Like I do believe that ours is the best because I know it works and I have like personal experience behind it, so I can testify for it. And then I see a lot of results, social proof, right? There's a lot of clients that do really well with it, so I know I have confidence in it. But at the end of the day, it's like if I do pick up coaching again, the technical aspect of it is kind of a moot point. It's all there already. So what I would do essentially is I'd only take on clients who had journals that we could go through together and just be like, all right, we're just going to plot down all of your trades and we're going to figure out what the hell's going on. Why are you taking losses? Do your wins make sense? How do we fix it? Can we fix it? Because maybe it's a technical error, right? Maybe it's not. Maybe it's something else. But I think that's the approach I would take. But I don't know if that would resonate with people. I don't know if that's what people want. Obviously, it's a pricey venture, and I don't like upselling people in general. But that's what I think. That's how it's structured, because I think that played such a pivotal role in my trading. And sometimes, like, not everybody can hold themselves accountable.
I agree. Yeah, I think that's the thing for me, was when I kind of like it started with a friend who was like, I really want to see what you do, and I'm like, I don't have time to teach you. I don't want to teach you, but I'm just going to Notion everything, and here's my live link. And then you kind of like, I'm really good at being motivated and disciplined. I'm super disciplined, motivated person. However, accountability is one whole other thing. And I think in trading, and this is the problem with the industry overall, isn't it? It's just too easy to kind of cheat, post stuff and it not be genuine. And I think that's why I came off socials, everything, for 6 months, because I was like, am I being truly transparent as a person? Am I truly showing everything? Am I kidding myself? Let's get to really, let's get to the nitty gritty of the self-awareness and become super conscious about my trading as well as the person I am. As that's why I've attracted investors, because I'm a person of integrity. I believe that's what they tell me. But you have to be, you have to be 100% an integral person in your trading, and I mean your P&L, right? Because someday you're going to have to show. Even when I had a couple of goes at the FTMO, I used to see them as an investor, and I'd go into the boardroom and present to them. So every trade I was taking. And I think that just accountability, it's just everything. I guess there'd be a lot of people up for that, Brian, where it's kind of going back to school. It works, unfortunately, as adults, even, having that level of accountability, I think is what some of us need. I had it when I was racing, I had a trainer, and he would check my heart rate and check my training schedule every week, and then do a 6-week test. And I got massive results with that level of accountability. I had to pay a lot of money for it, but that's where I got my results.
Yeah, I mean, it's like with anything, right? You need to establish a baseline, right? Because if you can't establish a baseline, then you don't understand where your progress is really, where it's at. Like, what's the difference between that baseline and where you're at 2 weeks later? So It's like finding a way to develop that baseline, which I think is through, KPIs or key performance indicators, right? So in trading, that's going to be things like strike rate, average winner, average loser, make sure your risk management's good, like how many trades you're taking any given week or day, stuff like that, right? And then your percent return, like establishing that baseline, tracking that stuff early on. And then, like for Letterman, if and when you do go live, try to figure out that baseline. So get like a week or two of data, and then figure out what your strike rate is, figure out how many trades you're taking, what your percent return is, all that stuff, and then compare it every week and see if you are progressing in terms of your stats. Because just pure fact, the data, it doesn't lie, right? And then if you see a downward progression, you got to figure out what's going on. And I think that's key. But like in terms of the accountability stuff, like I've never been one to personally have somebody, hold me accountable. And I don't know if that's because I don't necessarily need it, or because I don't like sharing information because I'm a private person, or I just don't work well with others. I think it's kind of all three, to be honest. But at the same time, it's maybe it's also an ego thing. Like I don't want help. You know what I mean? But I think a lot of people need it. But again, it's not a technical thing. It's an accountability thing. It's like, are you doing what you're supposed to be doing? Okay, let me see it. I haven't journaled this week. I'm like, okay, well, you're not going to progress. So that's that fight against yourself. But I do got to
run. Sorry, Blackwatch, go. Yeah, I was just going to say that's the whole thing with trading. It just gives you it's an opportunity to really look at yourself in the mirror and go, take a really long, hard look at who you really are as a person.
Still here.
Okay. I'm going to let you go, Brian. It's great to talk to you, and thanks for the content. Hi,
thanks
everybody.
for hopping on.
Take care.
Thanks for the chat, everyone.
Thanks,
Yeah.
Blackwatch.
Yeah,
Take care,
man.
bro.
Thank you. Cheers, guys.
Appreciate it,
cheers.
guys.
What a chat that was.
Thank you.
Head
Have a
down
nice
now, man.
evening.
Yeah,
Nice
no
call,
problem.
mate.
Yeah, no problem at all.
Appreciate it, brother.
Cheers, great.
Cheers, man.
Thank you.
See ya.
Later, guys.
See you later.
Bye.
Bye.